All right, and welcome back for another episode of Carnivore Trades. Today is Friday, August 26, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, here, big reversal on our hands, needless to say. Jerome Powell spoke this morning at Jackson Hole. And, essentially what he said is, kind of reiterated his commitment to fighting inflation, and that he said that there is likely going to be kind of scaling back of the rate hikes, like a slowing down, but not a stoppage. And he also said it was data dependent. Now, let me explain this. So a month ago, data dependent was a good thing because it meant like, oh, that leaves the door open for if we get a cool CPI print for the Fed to pause. Now data dependent is bad because it means that there's uncertainty in the market. And one thing that market hates more than anything, it's uncertainty. As you can see by the daily time frame here, huge 3% flush on the spiders. Still got about 45 minutes, so it wouldn't surprise me if we get a little bit of a bid algo pump off of that 100 moving average going into the final hour. But this is a pretty good sell-off here. It's starting to accelerate now. Triple Qs there, big reversal there, back below the trend line, and yeah, I mean, an engulfing reversal across the board. What can you say? Powell basically broke the unwritten rule today. It's kind of like a thing. You don't crash the market on a Friday because that leaves the door open for a Black Monday. And there's millions of Americans getting out of work right now, or getting out of work in the next couple hours, that aren't going to see this until after the market's closed. And it's going to sit in their head all weekend long, and it's just going to stew there. And that's, how you get those, I'm not saying this does happen, but that's how these setups happen. And it's kind of an unwritten rule that central bankers don't do that type of thing, especially on a Friday. But anyways, it happened. And if we want to go flip out, back over to the spiders here. So we've negated that CPI gap. So remember when the market was all euphoric because inflation was only 8.6%. And I said, we gapped up and I said, guys, this Marley's it's not going to work because the market's acting as if, because the CPI is 8.6, that the Fed is going to turn around and start ramping up the printing presses again. Like, guys, that's not what's going to happen. I've been saying for weeks, the bond market was flashing warning signs, the 10-year ripping higher, the 30-year ripping higher, the yield curve continuing to flatten. That was your warning sign, and today the market got a dose of reality. So that's kind of what we're looking at right now, and that is a humongous. I mean, they got people on board here as well yesterday with that little fake pump, and I mean, just a wild sell-off here, really across the board. Again, we'll probably stall out a little bit around that 100 moving average there, but I think this doesn't. Probably next stop is really at 400 level on the SPY. You also have the 50 MA in that area as well, so that would be kind of your next logical zone. The E-mini here, we talked about this beautiful rising wedge. We got a breakdown, a little bit of a back test of the 20, and then a great sell-off here, a little pump in the morning, and then right down to that 100. So the ES is already into the 100. If I wasn't doing this video, I might even look to scalp it at this point. That would probably be a pretty good risk reward there. But overall, a nice sell-off any way you slice it or dice it. Would have liked to see a little bit higher volume. I think the volume will probably come in on Monday. If we do get some type of a gap down, that's where you'll start to see more panic, and not really seeing volatility creep up that much. I mean, it's getting a nice bid, up 16%, but you'd think that the VIX would have like one of these, huge power candles up here. So I think if we do end up gapping down Monday, that could happen. But right now, volatility not doing anything too crazy at the moment. But overall, a really good sell-off day, engulfing candles pretty much on all of my charts here. And yeah, we actually peeled back a little bit of our short position here, so booked some of that as we're getting into profits here. But, there's still some more downside to go, but, we'll just take a look at the levels here one day at a time. Anyways, so SPY levels, we talked about 400, then you'll have another one right in this area around 390 and change. There's a pivot there, and this is kind of where you broke out. So that's where we looked for the market to go here in the short term. On the triple Qs, You're going to have some support at that 50 MA. You're already kind of a little bit there with the 100, and then you've got this pivot here as well. So we are potentially into a little bit of a bounce zone for the Qs. But, overall, it's a little bit disconnected here. So the Qs are kind of into support, and so are the spiders here, but just I see a little bit more downside here on the spiders here in the near term, but this is a pretty good level there for the Qs. So I'm not really sure what happens. Again, anything could happen over the week. They could walk this back over the weekend. So, that would not even rule that out at all. I've totally seen them do that before. So, but either way, those are your levels there on the Qs. So 50 MA, and then obviously right down to this area. So those are going to be the areas we look for on the downside. The Russell also getting hit. So this probably wants that 150 moving average necktie. So right in that area, that would probably give you a really good bounce level there on the Russell, but that also getting hit as well, taking out the lows from last week. And then lastly, the diamond, Dow Jones, huge sell-off. Dow down 2.6 is a big move for the diamond. So nice move there. And then you're kind of basically coming back to this. I wouldn't even really make much out of this gap at this point. This is kind of your better level right here. So right around the 323 area. And then of course that 50 MA upsloping will be your short-term targets there for the Dow. All right, so let's flip over to, so let's get on semis here. Nice reversal. So yesterday, I said, look, this is a pretty good outside bar. And NVIDIA's earnings report, they gapped down and then rallied up. So anytime you do that on earnings, it's usually a good sign. But then, again, yesterday, like I said, they might as well just close the market because none of this rally matters if Powell says the wrong things, right? And vice versa. If we were selling off yesterday and Powell said something dovish, it really doesn't matter. So even though it had that nice impressive reversal, it just got reversed right back down today with good volume too. So that volume is picking up here as we get into the final hour, but semis getting hit. They will have some short-term support. Probably around that. I wouldn't even worry about that 50 MA. Honestly, it's right around that 218.32 is where I've got it. So right in that zone there. This 50 MA is pretty minor. You've been trading through it so many times here, but this will be your more major level here in the near term. And then IGV, that's into the 50 MA right now. Also kind of minor. You did kind of flag a little bit of a bear, micro bearish inside bar there and getting a nice push down. This one probably hard to say. Probably have to take a fib out, but I'd say probably around the 282 area. It's going to have a little bit of support there on the daily time frame. Bio. So biotech, nice sell-off as well. That's probably wants that 50 MA. You also got those gaps in there in this area. So those are going to be your areas on the downside to look for. Dow Transports, nice rally up yesterday. Rejected that, basically kissed that 200 MA on the daily. Basically like just a kiss on the cheek, essentially. And, ever since that little topping candle there, we've come in pretty nicely, putting in a daily chart lower high now. So this probably wants to go back to that 1480 area there on that daily. All right, interest rates. So this one's the dynamic's a little bit strange here. Shouldn't say strange, but it's a little bit different. So the 2-year is down six basis points. And then we have the 10-year, which is, fractionally, the 10-year yield, to be specific, is fractionally higher. And then the 30-year yield is down. So the long end of the curve is getting bid. However, the yield curve is flatter across the board. So that's bearish, not a good thing. And the 2-year Treasury note yield is still a long ways away from the Fed funds rate. So there's problems out here in the bond market still. But you might ask yourself, why are bonds bidding right now if they're basically saying that they're going to continue hiking rates? I think a lot of it has to do with, and specifically not bonds, but like the 2-year isn't bidding, but the 30-year is. But there was a lot of bond shorts out there, and I think a little bit of it is sell the news here in the short term. So that's why I think you're not seeing as much of a reaction in those specific ends of the curve. But in the 2-year, we are seeing that inversion kind of exacerbate. So even with bonds up just a little bit, you can actually see TLT here, getting a nice bid. So up, 59 basis points right now. It's still a negative. So just to kind of explain that there. But yeah, overall, we'll see what happens on Monday. I'm not really sure. I mean, about what happens with the 30-year here. Probably pulls back into this area. But overall, still the trend is up here. on both the 30 and the 10-year, but just wanted to kind of go over that kind of yield curve dynamic with you. Anyways, let's shift gears here. XHB, so into the home builders, huge move down here. So that probably wants to hit that necktie there. 50 yen 100, you also have a little pivot there, all this little minor area of support there on the XHB, but a nice reversal, getting hit really hard. ITB, same kind of deal. So already kind of into that area. And then we talked about this level yesterday. That's going to be your kind of short-term support. VNQ getting hit as well. So that will probably fill the gap there and hit that 50 moving average in the next couple of days. Let's take a look at fins. So fins just continue to really kind of defy gravity. And this is a good reversal on XLF, by the way. But what I'm specifically talking about is the broker dealers. So broker dealers are still haven't taken out the low from August 22nd. So this is still, you know, if you don't take that out, you still have a daily chart higher low. And with the inverted yield curve, that really is a kind of questionable. But, you know, it is what it is. The chart is what it is. I'm not here to argue with it. It's just I find that very strange that broker dealers are still holding up with that inverted yield curve exacerbating, you know, especially with Powell's comments. But XLF did take out the lows, so this is more of the bank stocks as opposed to the brokers. But, you know, nice reversal, just like everything else here. You're basically going to fill that gap right now, and then your next level down there is that 50 moving average, and, you know, basically kind of coincides with right around there. So that was kind of your level there you broke out of. I'd say there's a good bounce level in play on XLF there. Anyways, crude, you know, kind of a nothing burger considering all the news. It did bid up into the close. Again, still has a daily chart higher high, but I'm still watching this weekly inside bar. This is telling me that it can go lower. But if it perks up and it starts to put in a bullish pattern, I would not be too shy about jumping in on it. So I'm definitely watching crude closely, but I still think it has one more little dip in the cards. XLE is still holding up really well. It's down, you know, 87 BP as I speak, but, you know, this is in, you know, that had a nice little power thrust 1, 2, 3 up. And really all this is a pause candle. So with the market getting bludgeoned today, XOP, OIH, all the, you know, OIH a little bit on the softer side, but still much stronger. You know, take a look at Chevron today. That's just a pause candle. Exxon, you know, Conoco, they're all kind of just hanging in that. Conoco is actually green. So energy stocks are showing a lot of strength here. And, you know, I think they're going to continue to do that moving forward, but got to get a good setup here for an entry. I'm not going to chase them up here after after this big run. I want to see a pullback or something, but I do like the energy space here moving forward. And then nat gas also, well, really just kind of a nothing burger today. Did get a little bit of a pop in the morning, but finished flat, so nothing really too crazy going on there. And then dollar was getting hit really hard this morning, and really nice reversal off the Powell comments, obviously. Big tail there, so this to me does want that 110 handle. But impressive move there for the dollar index. Gold is down a little bit here, but it still potentially could make a daily chart higher low. I think the market is kind of getting a knee-jerk reaction to gold right now, and I think this will start to bid eventually. I'm starting to get really attracted to the metals here. They may have one more little flush in them if we get panic, but I think that there's going to be a really good opportunity in all these moving forward. And even silver, you know, an industrial metal, is still, you know, hasn't taken out the lows here. So showing a little bit of relative strength. So that's really what I'll say for that right now. Platinum is getting hit a little bit. I still like platinum in this area. And then palladium also backing off that 2200 area. And copper tried to push higher. I don't like that it did this, honestly. I wanted to see a little bit more sideways action. I never like it when you push higher and try to break out before it's ready. A lot of the time that can cause you to fail. So not as in love with copper as I was really the last couple of days, but we'll see what we get here. It's still holding up for now, so we'll see if the pattern develops a little bit more. Anyways, let's get over to Bitcoin. So again, bearish in sidebar starting to break down here. This isn't a huge sell-off by any means. I think maybe sellers in Bitcoin may be a little bit tired right now. It's had a really good fade. But still down 4% on the day. Ether down 8%. Ether still hasn't taken out this low, and Ether continues to be the strong name in the sector. You see Doge down pretty nicely. Polkadot down 6%. You know, 6%, 8%. That's really nothing for a crypto, honestly. But Overall, the lead dog down 4. We'll see if it continues into the weekend. Maybe they flush it out. But overall, still got that bearish inside bar starting to play out here. So we'll keep an eye on that moving forward. All right, yeah, so lastly, about almost 3:30 p.m. here. So market's closing in about a half an hour. Still down 3% on the spiders. Tried to get a little bit of a bounce there on that last 10-minute candle and really just faded right away. We'll see if they flush it into the close. It'd be very interesting. I actually kind of wouldn't rule that out as they try to flush some hands out of here. But anyway you slice it, really, really, really impressive reversal. Finally, we get some volatility in the market after that really dog of a month, August. I mean, that's just, you know, how it normally is. But in any case, glad to see the volatility come back a little bit here. Anyways, guys, gonna wrap it up here. You guys take care. We'll see what we get next week. Come find me on carnivoretrades.com, and I'll talk to you all tomorrow.